In this video, we'll be breaking down SCHA, the Schwab US Small Cap ETF, and whether it's worth your attention. If you're curious about how small cap stocks fit into an investing strategy, this one's for you. So let's dive in. Alright, let's start with the basics. What exactly is SCHA? This is an exchange traded fund or ETF that tracks the Dow Jones US Small Cap Total Stock Market Index. This index includes roughly 1,750 small cap US companies, and these are smaller players, typically with market caps between 300 million and 2 billion. Small cap stocks are often seen as having more room to grow compared to large cap companies, but they could also be a little more volatile. Historically, small caps have had periods of strong performance, but in recent years, large caps, especially those in the S&P 500, have been leading the way. That being said, SCHA gives you exposure to the small cap segment of the market in a simple, low-cost package, which could complement a broader investment strategy. Alright, so we've talked about why small cap stocks might deserve a spot in your portfolio. Now let's break down SCHA and what makes it stand out straight from its fact sheet. First off, SCHA holds around 1,750 stocks, giving you broad exposure to a wide range of small cap companies. This diversification means your risk isn't just tied to a few names, but it's being spread across many sectors. And speaking of sectors, SCHA's largest allocations are in sectors like financials, industrials, or technology, which reflects the fund's focus on areas of the market with high growth potential. Now, if we look at their specific holdings, there's even a few companies that you may have heard of, such as Reddit, Firm, Duolingo, and more. When it comes to cost, SCHA really shines with its low expense ratio of 0.04%. That means more of your money stays invested rather than being eaten up by fees, something every investor can appreciate. Performance-wise, SCHA has returned around 11.6% annually since its inception in 2009. While it hasn't outpaced large-cap heavyweights like the S&P 500 ETF in recent years, it still serves a valuable piece in a diversified portfolio, particularly for those looking to tap into the small-cap growth potential. Now let's talk about dividends, because even though SCHA is primarily a growth-focused ETF, it does provide some income potential. The fund currently has a dividend yield around 1%, which, while it is a bit modest, can add a little extra to your overall return. The dividends from SCHA come from the small cap companies it holds, many of which reinvest the profits back into their businesses for growth rather than paying out large dividends. This is typical for smaller companies, but it's still a nice bonus for investors who want some level of income alongside the potential capital appreciation. Let's take a minute to compare SCHA to some other popular ETFs. For example, how does it stack up against SCHD, which is more focused on dividends? If we look at a $10,000 investment starting back in 2011, SCHD has had an annualized return of 12.61, while SCHA comes in around 10.83. So while SCHA doesn't quite outperform SCHD, it still put up some solid numbers and could be a potential candidate for pairing these two in a portfolio. Now, how does it compare to something like VU? Using the same $10,000 investment since 2010, we can see that VU would have an annualized return of 14.83% compared to SCHA at 10.89%. VU has those large cap companies which have performed in recent years. These two funds could work well when paired in some portfolios. So SCHA could work well in some portfolios that are seeking diversification from those large cap companies that often make up common ETFs like VU or SCHD. Let me know if you think SCHA is a fund you're considering for your portfolio. If you did make it this far in the video, be sure to like, comment, and subscribe for more ETF reviews.